Hi guys, I thought I'd make a short video talking about the end of 2024 and how my portfolio is doing. Yeah, let's just look. 2024 I made 20.49. I was close to 30%, but some incidents happened, like Novo taking, well, I bought around here somewhere, yeah, taking a 20% dip. Investments, bank investments, and bank account. Anyways, top performer is Shopify. It's just been a crazy push this year. I don't know, they had nice numbers, but I think the price is way over what it should be, so I actually cut a bit of Shopify. I like the company long term. It keeps creating value, doesn't have any major risks that I can tell. Anyways, Fortinet is one of my favorite tech companies, I would say. It's done very good this year, 47%. My goal is to make 17% a year, and it would basically set me up for a very nice retirement. And that's my goal, 17%. So, and this is why you don't have all your money into one basket as well, unless that basket is very good. I cut some of my PayPal. I had 20% in the start of the year. It made the run up. It was a very safe bet investment, but yeah, you can call it a bet because I put a large chunk of my money in it, as I saw there was close to no downside. Long term, short term, yeah, price can move up and down. Long term, PayPal will create value. They have some growth drivers. I bought them at 8% free cash flow yield per share, but they also kept buying up shares. So my price that I paid probably gives me closer to 12%, 10 to 12% free cash flow yield per share. That might not tell you much, but basically that means if they would pay all the cash flow in dividend, I would be able to get 12% back a year. It's a good indicator for showing strong cash flow. And as long as they keep growing that cash flow, 20 years down the line, if they manage to grow their cash flow and they decide to pay a dividend, I will be one of those shareholders that will receive that nice juicy payback just because I bought it very cheap, very stable company, quite predictable, and they have growth opportunities. Booking holding, very low costs, I think, in Booking. Go here, you see they make 23 billion and 3.5 billion of that is cost of revenue. Very solid company, and they have a long future ahead of them. I think travel demand will be something that lasts for a long time. I got them at a good price, so yeah, I'm happy with Booking. But that's the problem as well. Like, per share basis, I wouldn't be able to buy this in my bank account because I would be able to get like 2 shares maybe. It's just very expensive per share stock, but it's a good company. If you go down, look, gross margins 84.6%, as that means like 15% is costs. This is what you want in a company, and you have a really high free cash flow margin. Profit margin is decent. Operating profit is okay. Like, you look at the free cash flow yield you get per share, it's higher if you compare it to a treasury bond. If you can get it at a good price. What did I pay for it? 3,754, 3,440. So I got it at a good price, good free cash flow margin. It's gonna keep growing, but it's a bit dependent on what the economy does. So I don't want to put too much money into Booking, and that's why I don't go and buy shares in my bank in it, because if we get into a bad economy, I think Booking will, well, the company won't suffer, but their profits will suffer. They will probably still make decent money and so on, but the share price will decline for sure if we enter a bad economy. Not because the business is bad, because demand will lower. Madly, very small position. It's basically bad Amazon. Yeah, that's how you describe it, a bad Amazon. But they create a lot of value for their shareholders, and it was very cheap when I bought it, and I think it's actually a decent price now as well. If you go down and you look, the cash flow yield, very nice. You see, it used to be trading around 1%, now it's trading in 6.5. So you see over here it was too expensive, and now when they're, as you see, cost of revenue, gross margin is 52%, decent business, makes a lot of cash flow. Yeah, MSCI, very boring company, but after earnings it got a scare and it dropped in price, so I bought because I believe the company is a stable grower over a long-term period. Ulta Beauty, very boring company. I've held it for 1 year now. I think the main driver for Ulta is expanding. Well, they're expanding all over the world. Essentially, they're going digital. You have Monster Beverage, solid company, very good financials. It doesn't really grow very fast nowadays, but it won't go anywhere, you know. It's just a boring position to hold in your portfolio. Not much will happen with Monster. EDX Laboratories, it develops veterinary equipment, and it has a lot of, how do you say, moats, a lot of competitive moats. Good business all around when it comes to financials. Adobe, very solid business, very boring business. They basically live on subscriptions. And if you're watching YouTube, most of the YouTubers use Adobe or similar programs, even if it's just for thumbnails, Photoshop, you know what it is. And they have good financials. And they have good future growth. They have AI and so on. Nike, partly the reason why I bought Nike is because people believe the growth is dead, and they believe this company is basically out of the game because they pulled off a lot of their space in retailers, and they're moving digital. So this makes their business more attractive, I would say, in that reason that they will have less costs. So over time, I think this will Nike will adjust, and I should see some, and my copier should see some price adjustment in the stock, and therefore I believe it's maybe a 10-year period we might see something good from Nike. It's not a bet that tomorrow this is going to 2x or something like that. I don't believe that. I don't believe it's gonna be $200. I believe maybe it's gonna be $140 if I would throw out the number. It's a slow grower, pays a dividend. I don't care too much. Price action does daily. 10 years from now, I think I'll make money. No high value creator. And for a long time, if you actually just look, for a long time, it was very, very overbought, overvalued. And now it's actually pulled back to a sensible level, and yeah, I started by here, and then it fell when earnings came out. Not earnings, when the report came out it fell more. But when earnings comes out, I think this will see a rebound, and long term it will be solid, just value growth. And yeah, I think they will create value. They have diabetes drugs, and it's not going away. Like, if you have diabetes, you have diabetes, what can you do about it? Go to Novo, that's like it, and investors make money. Evo is a bit controversial. I believe the company is very undervalued. I believe I can make twice my money in this just on valuation standpoint. It's a Swedish company, so I know about it because I'm Swedish. So that's nice, but a lot of Americans have never heard about Evo. Oh gosh, my voice is going away. Yeah. Anyways, very undervalued. Still creates value for shareholders. They have a very solid business model and they will grow over time. So I'm not afraid to hold this for the long term. Celsius holding, a more questionable holding, but it's fallen 42% and a lot of people are panicking because of the overstock of Pepsi. Pepsi holds a big position on Celsius, and I don't remember where I found it, but I remember I read something that Pepsi liked the company at a 6 billion valuation. They liked Celsius at 6 billion a year ago, so well, not a year ago, but so it had to be somewhere here. It was talking like Pepsi liked the valuation of Celsius. And if you look into it, you see why. It's a solid business model, solid company. Management is a bit iffy. That's one thing I don't like about Celsius, is the management can be questionable. But I do think they traded a very nice price now. I think most of the fear is in the price, and they will create future value. And this is just a company I will keep holding. I'm not afraid to hold it, even if it's down 50%. If it falls to 70%, I won't cut it. If I lose 90%, I won't cut it. I will just leave it there, because I believe it has a potential to make me a high amount of return with relative low, how do you say, like financial risk. If you look at the problem is you can't really look at their financials and go out, like it's harder to predict, because it's a company that has growing demand and they need to keep working together with Pepsi to fill that demand. If Pepsi would just stop working with them, the company could lose all its value, but Pepsi is working with them. They overbought because they were, I guess, hyped, and the management realized that Pepsi overbought and they sold, what was it, 1.4 billion stock, and that's why 1.4 billion worth of stock, and that's why we end up in today's price. Like, you have management selling off, and then it goes up and management sells off, and bad news hits that, oh gosh, management is selling, Pepsi has issues because they bought too much, and now we're sitting here at 6.7 billion valuation, when Pepsi was considering, I think if I remember correctly, Pepsi was considering buying the entire company for 6 billion, was considering. So, but they have, and Pepsi might as well do it. You see here, they put a 500 million investment into the drink company, net cash investment, and you see short-term cash and short-term investment skyrocketed here, 600 million, 700, and still growing. Total common shares, and this is the downside, is they're still diluting, and that's my big concern is management and management decisions in this company. It's not actually the financials, it's the management. I want to see total common shares actually take a turn and they actually start buying back shares. But as I said, I will be holding this for better or worse for a long period, because I still believe the company is creating value. If you go into ratios, return on investment is just now starting to pay off. And I think in the future we will see something more towards, towards 20 to 30%. It's low this year because of the Pepsi problem. And if you go, it's 11.32, so they create 8% value, 6%. So they create around 10% value last year and 7% this year. Management is decently, their investments is paying off decently. So yeah, It's just a good business, but the management could have some improvements, is my comment on Celsius. So let's look at my bank. And yeah, I didn't open this until 2022. Yeah, you see, and I started to slowly put in money. Slowly. And it's not until actually in the start here I actually put in a lot more money. This was basically I put in money, took out money. You know, I had a lot of expenses in my life during this period, so I couldn't really invest anything. But overall, I'm up 42% here. So I more than doubled what I did on my diversified top-tier platform. And that's because, yeah, here's my goal. I wanted to reach 10 million. But if we look what I own Nvidia, not Nvidia. People got mad last time I said Nvidia for some reason. 2 of Nvidia. Yes, it's not a lot, you know. It's just mainly my entire portfolio is long-term into PayPal, you know. And yeah, I had most of it into Microsoft before, but I had to sell Microsoft. I had to sell my portfolio, all of it. But anyways, real life stuff. I bought some Novo Nordisk, and that's what I'm down on is Novo Nordisk. But Celsius is up a bit, L'Oreal, Nvidia. I'll keep buying some Celsius. I'll probably keep buying some Novo. I want to add some VTI. The problem with Sweden, you can't buy VTI, so I'm pretty much forced to either get a global index that has a ridiculous fee, or I'm basically forced to make my own index, which is kind of what I'm doing. I'm buying companies with decent business fundamentals, and I'm just slowly adding over time. Yeah. I'm getting have received some dividends over time. This was 2020. I put all my money into Store Capital, and they paid me 6,000 in dividend, and I made like 80% or something because they got bought up by another company. So the 1 year where everyone lost money, I actually made money, but then I had to withdraw all my money. Yes, I'm taking it a bit more serious now because I'm actually planning for my retirement more. Back then it was more like investing for vacation, investing for stuff you want. Now it's more like investing for retirement, having a safe future, and all of that. So my priorities has changed a bit the last years. And here you have, yeah, I'm happy with 2024. I think 2025 might be a more flat year. Hopefully I can still keep above 17%. It might be hard because PayPal had a really good run last year, sadly, so I couldn't buy more PayPal at a good price. But I'm fairly happy with Novo being cheap because I like Novo, and Nvidia had a good opportunity as well to add some shares, but I'm not really that interested in Nvidia. Like, AI is just the hot thing out there that people buys and they pray it goes up. But Nvidia actually have good fundamentals, but I don't like the price too much. I actually would want it below 100, so I'm not actually buying a lot. I'm just letting it sit until I retire. And that's what most people should do when they invest in good companies and hold. Ignore all the trashy fundamentals, the companies with high costs. And just have something that returns you money over a long term. Yeah. Hope you enjoyed. Cheers.